આપણી સાથે અશોક લેલેના મેનેજમેન્ટ જોડાયેલા છે. Sir, I also wanted to understand a scenario in terms of net debt, because we have been witnessing it is on a constant reducing kind of trajectory, and the kind of cash generated, how would you be using that to reduce the debt, or are there any other plans to use that?
I think again a very good question. Our net debt has been reduced by over 1,000 crores. The teams have worked wonderfully in collections, in inventory management, in raw material management, and all of this has helped us to reduce our net debt, which we use to pay off our overall debt, which helped us to reduce our net debt significantly. Our debt equity at the moment is hardly 0.5, so we are not in any worried position. We are very comfortably placed, and we will continue to focus on cash flows is all I would want to say.
And what are your plans regarding the EV transition, given the condition that already crude prices are at highest inflated levels? That would be a concern for the current situation. Are you looking towards this market share?
See, for us, as one of our vision is to be in the global top 10 commercial vehicle manufacturers. For that, we require the following. We need to grow our MHCV market share in India, which we are pursuing. The second one is to grow our LCV volumes, which again, through the launch of Bada Dost, it was one of the most successful launches, best commercial vehicle of the year last year, doing very well, and we will also have further introductions in LCV stable. The third thing we'll have to do is to grow our export volumes, which again I talked about very briefly. Month on month, we're seeing export volumes grow, and we have a much larger suite of products today to cater to the markets that we are expanding into, especially into Africa. The fourth thing that we'll have to do, from now on, we all know that electric vehicles, green energy, net zero carbon are ways in which mobility is going to move. So we have to future-proof Ashok Leyland, which is why we said instead of having the EV business in Ashok Leyland, we would house it in a separate entity called Switch. There's a separate management team of very capable people who have been brought on board. There are product plans there. There are product introductions being planned, and there are multiple solutions that are being planned, including e-mobility as a service. For all of this, this requires capital, which is why we would be, inviting capital. We are looking at investors, both strategic and financial, into Switch, and you will hear more about it as we move forward from the Switch management itself. The whole strategy finally is to converge and see that we get a much larger share of the customer and we become a credible presence in commercial vehicles. And you will hear more on these fronts, be it on CNG, be it on LCV, be it on international, or be it on Switch, in the quarters to come.
And a quick idea for the industry as such, because we have been witnessing quite different challenges, may it be COVID, may it be semiconductor kind of issue, BS6 transition, CNG, and now the kind of electric shift towards which we are witnessing. How do you foresee it in the next 1 to 2 years? If you can highlight me a bit on the ground level situation that you are witnessing.
Well, I think that the auto industry, and especially the commercial vehicle industry, has been very, very resilient. It has taken up all the challenges that it has faced. If you look at it, it started with the introduction of GST, which is a very positive move, but it had to settle down very quickly. After that, we had the NBFC crisis, and after that, we had BS4 to BS6, and then, of course, semiconductor challenge, raw material price increases challenge, and of course, COVID, which was a pan-world challenge. Through all of this, I think the commercial vehicle manufacturers, including Ashok Leyland, have been very, very resilient. Now, when things are moving forward, each of Ashok Leyland has taken sufficient steps to be an important presence in EV as well. So we believe that as things demand improves and capabilities are set up, Ashok Leyland should benefit from the future.